Hello everyone, how's everyone doing? It's been a while since I last made a video, and I thought it would be a good idea to return to making videos by going over speculation that I've been assessing for almost 4 days now within this week. So I think before we start to speak about the main idea that I have, it's important to kind of give you guys a basis on what it is that I'm trying to achieve here. So let's go on Tuesday, and I have a screenshot here that would explain everything that we are looking at right now. So here we have the past couple of days price action, and since we had this big drop that occurred on last week when the Federal Reserve cut interest rates by 25 basis points, it dropped significantly, the biggest drop that we had seen within the last few weeks. And the main question that came up to me when I saw this drop is this drop here going to be a signal for lower price action, or is it just a retracement? And a summary of how I came to the conclusion that it was a retracement was, first of all, because of arrays, time-based manipulation below this monthly open, and more arrays here that met imbalances that needed to be filled. But the main thing was going against retail assumption. When a retail trader sees something like this and they see a big drop in price action after smooth sailing upwards, they begin to assume that it's going to the floor, it's over, we're going to be seeing below 20,000 again. So after we had the analysis of this big drop lower here into this area, which I think is better on the ETH, yeah, here, it's clearer here. You can see that we had the manipulation point into this unfilled wick, into the lower quadrant, into this monthly open, and then from there we started to trade higher. We had a scenario at this high here, and we were speculating whether this was going to be a market shift or a sweep on liquidity that would take us lower, and it turned out that it was going to be a market shift. I think I can scroll here and I can find a quick out. Oh yeah, here. So you see, as we took buy side, which is this blue line here, we failed to retreat from it. We stayed in bullish order flow, and we had true manipulation at 930, which was second stage below this low here, into the propulsion block, which was directly on the tick. Propulsion block high, and then the manipulation low was directly at this counter rate. And then from there, we saw higher prices. However, I did not see something that I liked, so I did not trade. But you can see that's clear that after we had that manipulation, it was bullish order flow until we reached a breaker. And then from there, we continued the same scenario where we continued in bullish order flow. And from there, I started to speculate the mitigation range of a quadrant. Now notice here, we have a new week opening gap, and we also have an inversion. Those two areas were like big black holes that I wanted to see price gravitate towards. What I was hoping for initially was that price would push through the efficient week opening gap and just reach for the inversion and do whatever it has to do there, whether that is to continue through it or to drop back low. Today morning, when I got into the charts and saw that price had actually reversed from this new week opening gap, the efficient new week opening gap after yesterday's bank holiday, I started to wonder, is this going to be the point where we start reversing, either to fill discount needs, fill imbalances, or just to seek discounted liquidity. So I'm going to read the paragraphs that I have here, and I'm going to go on the screenshot, and I have to elaborate more on the chart. Then I have it ready here, and I can switch quickly. So, okay. Overnight, after having the bank holiday, price had a significant drop that occurred directly after the efficient analog. Now, we had previously stated that we would have liked to see price reach into a more premium region towards an inversion if price was looking to create an all-time high. A question arises from the scenario: is it a retracement or a sweep? basically repeating everything that we did on Tuesday and Monday. Let me review what I wrote. Okay, so if price had wanted to create an all-time high, what I believe is that price would first seek this inversion for value gap. And then whatever it wants to do there, it will do. But I had it in my mind that this N walk here was going to be completely pushed through because of this market shift. When considering a scenario where this is a sweep, it would make sense on a scale where it would be in order to manipulate retail. A push through a previous high that was supposed to be a resistance level to bring price lower, broken and now speculated to be used as support moving forward, would be the first thing to occur to a retail mind. And the scenario where this is a sweep would be faking out majority of liquidity in the market. So when considering this to be retracement, would just be precisely trading trend lines. What I'm saying here is a scenario where this is just a retracement would align with retail mindset too much for me to consider it true. Notice here we had previous speculative support. What many would have considered is going to happen when price goes back to this level is it's going to be pushed through, or it's going to be, it's going to be pushed from, it's going to be used as resistance, or it's going to be pushed through, and then you're going to come back to it and use as support to bring price higher. And because of this big drop here, most of the ideologies that people have had would be that this was going to be used as resistance, and this wouldn't have been pushed through. But because we know better, we understand that this was going to be a market shift. And then from here, the same idea comes back. Is this going to be used as a market shift, or is this going to be used as a retracement? Is price going to go back lower into here, touch this previous support level, resistance level, and then bounce back higher, meeting retail assumption? Or is it going to do the opposite? Is it going to have a brief retracement and then continue pushing back higher? The main thing that I didn't like about this being a retracement is that it happened in a place where it would make sense to reverse from. Here, I think if it will be clear, because okay, so the main idea, what I'm trying to reach is this bothers me so much. Okay, my main concern was that why would this big drop happen as we touch into the big opening gap? If it had happened here, or if it maybe had happened after we reclaim inversion, then that would make a bit more sense. But it happening here can indicate it being a sweep instead of it being a retracement. To me, watching price touch that efficient analog, then drop like that would have caused me to place a boundary to how low it can drop before the idea of higher price off table. Let me continue, and then I'll go back to what I was trying to say there. I'm going to skip this text here and screenshot, and I want to move into here for a quick second. Earlier this week, we had a similar situation. We took some liquidity, and I was speculating whether this was going to be a sweep or a market. Now, the boundaries that I had for this to be a market shift was that I didn't want to see it touch this breakaway. Many people may see price going down lower and lower, touch this gap here, and still consider it to be bullish. That's wrong. After price takes a high or a low, you want to set boundaries to how much it can push past it or below it if you're looking at a bullish sweep. So in this scenario where we had taken buy side liquidity, we dropped lower here, creating a high time frame 4 hour fair value gap, which was roughly within this area here. And then we had price accumulate a bunch and then drop once more, create a second stage manipulation, touch the 4 hour gap, leave this gap open, and not even breach a discount. And that obviously led me to believe that this was going to be a market shift, and price was going to return to this high, create a new momentary high. Now, going back to the scenario that we had here, is as we take this liquidity and price drops, Notice where price retraces to. It's true that it's still in a dealing range premium, but I don't like that it breached this imbalance here. I would have liked to see it remain within this gap here, or um, not have this big drop and have a subtle retracement and then move back higher to touch its inversion. The same kind of scenario that we had if we take this liquidity, we have an institutional order flow entry drill into this gap here, and then quickly we leave out of it. We don't have a big kind of drop. It's still a bullish candle with a big wick lower that's deemed as manipulation. Open low, low is manipulation, then we have a high, and then we have a close. That's how manipulation would look like. Not like this. When we have a candle that drops like this and it breaches a deviation range discount and touches a presumed breakaway, if you wanted to have continued bullish price action, then this being retracements starts to become unbacked by evidence. So let's take into place the lower time frame scenario I had before this, how when price ran a short-term high, it failed to return gap, which deemed as a breakaway, pushing bullish ideology into further speculation, exactly what I described here. And notice how it moved. It treated the run of the high as a market shift instead of a sweep, failing to even reach this kind of mitigation range. Running swiftly through a short-term low, creating a breaker. Swiftly through a short-term low, creates a higher high, and there we have a breaker that price retraces to. There should have been a lower time frame for value that put in here. Price retraces and then starts to move higher slowly. So this is what concerns me when considering our bullish scenario. I just mentioned this was let's read it for the sake of it. I don't like that price breach discount and this imbalance discount. I've touched on the analog. Assuming major higher prices, price should not have reached down this much. I would have liked to see it shortly move back into the more premium balance, then begin to move higher. What I was mentioning previously, I would have liked to just have a small manipulation wick that would have tapped into this, leave it as an IO fed, and then continue to basically move on a route where it would inverse this gap. Let me say that one more time, more clear. When considering major bullish scenario, and you're expecting this inversion for value gap here to be inversed, and you want to create a new all-time high, you wouldn't have wanted to see this. You would have wanted to see a short-term stab, a quick jump into this gap here, and then continue to move higher, with assumption that this stab here is proof enough to lead you in the way that bullish price action is going to occur, which would mean reclaiming this inversion and then heading to make a new all-time high. And that's not what happened here. So this puts me off of the idea that this was a retracement. Basically, what I'm trying to get at is that the retracement would have been very brief for me to consider it to still be bullish. Now, this is where I collect evidence against my initial thinking. The way that I like to develop ideas, especially when there's lots of ideas, is you need to consider your part and then try to collect as much evidence as you can against your part. So here, then again, you need to keep in consideration that price has a big retracement in a while. So we've had multiple up close days. The only manipulation that we've had was this drop here, and we know it's manipulation because, again, time-based manipulation, low monthly open, movement into this unfilled wick, and also the lower quadrant of the indication range. All of the trading days this week, besides today, have been up close candles without significant wicks. So maybe I am wrong, and this is just a sweep, and this is just a steep retracement because we've had lack of recently. So notice most of the wicks within this week. This is Monday, Tuesday, Wednesday was a bank holiday. This is Thursday. Most of the days within this segment here, the wicks that move down aren't as significant as you would want them to be if you're considering the possibility of a new all-time high being created. Usually before a big run higher, there is significant manipulation, which we don't have here unless I am wrong, and this is the significant manipulation that we're going to be having before reaching for new all-time highs. Also, something against me that's worth considering is that this counter dealing rate has not yet been breached. I am just not in favor of this happening at touching the analog emission of the quadrant. Yeah, so as I mentioned previously in the video, the dealing range discount has not yet been breached. So even when considering the possibility of this being just a steep retracement, it doesn't meet the requirements of being a steep retracement, as dealing range discount has not yet been breached. But on a lower time frame, mitigation range discount has been breached, and this is a discounted gap. I am just not in favor of this happening at touching that analog and reaching the upper quadrant. Yeah, this would have been a completely fine scenario if this had happened here or even within the upper range quadrant, because it's stopping at such a kind of odd premium array after we had the market shift, and kind of switching the ideology of having bullish framework right now is offsetting to me. I'll say that one more time just to cement it into my head as well. A retracement happening after we had cemented bullish ideology into our heads is concerning. But at the same time, it's not concerning because after having a run higher like this, many retail traders seeing a drop like this would have them concerned and make them flip into a bearish ideology. While I don't want to say more experienced, but more experienced retail traders would see this as a drop to touch back to this high and then use that as resistance, which is consequently directly at discount. So again, the drop here may seem to retail traders as a retracement, which is why I don't want to deem it as a retracement, which is why I'm considering the possibility of it being a sweep. But the possibility of it being a sweep comes down to lower time frame conditions, which we're going to be looking at right now. The main thing that I need to keep under magnifying glass is what price does after taking the short-term low. Does it reverse from it, respecting this counter raise, or does it push through it, respecting premium raise? That is the first obstacle that has to be put down before considering whether or not this is a retracement or a shift in order flow. So this is the 1 hour time frame, and you can see that section where we had the run higher into the opening gap, spent some time within it, and then we had that big push higher, then we kind of distribute. See, we have kind of an AMD, accumulation, manipulation, and distribute lower. The distribution obviously had a marker at this point of discounted liquidity, but the main question that I have now is, are we going to push through this low, or are we going to move back from it? The reason that this question is important goes back to the idea of second phase manipulation. So basically, when looking at a short-term low inside of a gap like this here, especially when it's in discount, if you are bullish, you'd want to see it retrace from it. Take back this high, create a bullish breaker, and then push through this inversion, reaching for new all-time highs. Now, for that to happen, we would have to push through all of these premium arrays and respect this discount rate. The second scenario, which I'm still unsure about, which is why I have this question mark here, is that price can push through this after moving back into this gap here, or maybe even this gap. After moving back into these gaps, these premium gaps, it can definitely move back lower, rush through these discount arrays, and then put us back to where we were on Monday within this propulsion block. So that's the main question. And if we go back to the first couple of screenshots, the one before, one after this, yeah, here. This is kind of the scenario that I'm hoping for if I'm looking for new all-time highs. I'm looking for price to go beneath that 1 hour short-term low that we just looked at right now, swiftly push back through it, remain in respect to this counter raise, and start to push through premium raise, like this reclaimed gap here. I mean, like this balanced price range here. And then push through this liquidity as well, and then market shift to this high, and leave this as a breakaway. So what I'm looking for right now is signs that price wants to push through this low, or if it wants to reverse from it. And that's going to be the kind of base that I have when considering a higher time frame idea. Let me go on the chart and draw this out just so it's a little more clear. What it looks like right now is that we just pushed through this gap here. Maybe the next short-term draw before 9:30, possibly this candle's high, or maybe even this imbalance here, unless there's lower time frame. But I think I took off this line here, so let me put it back on. So the point that I'm trying to reach, the way that I'm using lower time frame to confirm higher time frame, is after price dips below this low, if it wants to remain in respect of this gap here, it would then have to push through this gap here as well as this gap here. Or more singularly, this gap here. And that will give us a scenario where it's kind of like this, and it is deemed as a retracement. This drop here, and this scenario, which I'm gonna draw out, this drop here is gonna be a retracement. So here, drops, takes down this short-term low, and as we know from the speculative manipulation, if it wants to reject from that low, it's gonna stay in respect of this gap. It's gonna be true soup. It's gonna be true turtle soup, and it's gonna reverse higher, inverse this gap here, and then head on to make higher price. Or in the case where price is going to return to a premium of this small mitigation range here, and then drop back lower, a scenario like this would be expected, where it returns to a premium area and then starts to ramage through these discounted rates. Now, what do you notice about both situations? Both situations give us intel on whether this is a retracement or if this is a sweep, answering the question that I first encountered when I went onto the charts. So this is how you kind of build a framework to use data or price action to answer questions that you have. So let me draw it again. Actually, I'll go on a higher time frame and I'll kind of draw out how answer my question. So we know that price had this big drop here. Now, how do we answer what this big drop is? If price starts to retreat from this short-term low and inverse this gap here, we can deem this as a retracement. If price drops below this low, reaches back into a premium array, and then continues to push lower and shifts through this low in the same way that we had the higher time frame scenario from this shift here, and we had this to confirm it, we could then start to answer that it's going to be a bearish market structure shift. So this the same way that after we took this high, we started to look for reasons that this is going to be a market shift because we had this point of manipulation. It makes sense for price to push through this high. We look for evidence to support the idea behind price pushing through this high, and the evidence behind that was the respect of this discounted gap. And once price started to push through it, we started to deem this run on this high as a market shift. Now, what we're doing on lower time frame is frankly the opposite. We're looking for evidence that this is not going to be a market shift, and that this is going to be a sweep, unlike we had on the 4-hour scenario. And let me put it in a way where it sounds like the 4-hour one. If we were looking for this to be a shift, what would we have liked to see? The same way that we had this bullish fair value gap here support the idea of it being a shift, we can use this bearish fair value gap as evidence towards this being a shift. It's basically flipped. You have a short-term high here, we run through it. We have a gap here that we use as evidence that we're going to shift through this high. If it does respect it, we're going to return to this high and shift through it. If it doesn't respect it, we're going to move on lower, and this is going to be a market shift. Or this is going to be a sweep if we do push lower and inverse this gap here. So in the previous scenario, what happened? We respected the gap here, treated it as a institutional order flow entry drill, which pushed me towards bullish speculation. And then once we had that, we created a new higher high, and now we're at the scenario that we are now. We have a short-term low, we have a high, and we have a lower low. What obstacle do we face here? Are we going to respect this gap here, or are we going to inverse it? In the case that we do respect it, what can we deem the take on this low as? A market shift. Now, in the scenario where price does push through this fair value gap, what can we deem the take on this low? A turtle soup. Go on to take this high, projected as this high here, and then we can start to look at this inversion fair value gap as a point of interest. So basically all we can do now is wait for these 1 hour and a half. And then from there, 2 hours and a half. And from there we can start to piece in what was the main reason behind price taking this low. So I hope that clears up my thinking for today's price action. I hope that everyone learned something from this video, and I'm definitely going to get back to making these videos because they really help me develop my ideas when I'm just talking freely like this and it's just raw footage of me just speaking and it's not scripted or anything. I speak of new ideas that I did not have written down. So yeah, I hope everyone enjoyed this video. I hope everyone learned something, and be safe.